You're listening to The Whole Truth, a Resources Rising Stars podcast.
Alex, some very good exploration results released a few days ago. I suppose the question here is, Critical Resources is the company. When will Critical Resources get critical mass?
That's a great question. Well, and I think the results that we came out this week, I suppose the really pleasing thing was it was right off the back of an exploration target that we released a week before. And that exploration target wasn't something that we just sort of, came across in short order. It's as a result of, analysing and interpreting the data that we've amassed over the last 24 months of the project. So, 44,000 metres of drilling, a heap of samples, rock chip, geophysics. That's the first time we've been able to really get a good handle of a real pathway to what do we have at Mavis Lake. So, holistically, we see the potential to sort of 30 to 40 million tonnes. The results that came out this week really, we didn't know about those discoveries when we came up with the exploration target. So it just proves our theory and our confidence behind that ability to continue investing in exploration and growing resource mass, critical mass at Mavis Lake.
So you've established that in this week's news that you have another big collection or a big system of spodumene-bearing pegmatite. That's in an area that's outside both the existing JORC resource and the exploration target you referred to. Is that correct?
So outside of the JORC resource, but it would form part of that exploration target. So, the exploration target was split into three specific areas. So around the Gullwing pegmatite, the Tot pegmatite, and then the Mavis Lake main zone. These discoveries were east of main zone. So that would, again, give us confidence of hitting that target that we've identified at the main zone itself.
You say you're sort of on the way to get yourself 30 to 40 million tonnes here. Why do you nominate that figure? Is that enough to drive an economic proposition?
Look, I actually believe, and the numbers that we've done internally, that the economic proposition for Mavis Lake is much lower than that. If we have a look at the infrastructure advantage that we have and some of the things that we don't need to spend money on, Mavis Lake doesn't require a tier one kind of 80, 100 million tonne resource. The 30 to 40 million tonnes we believe is there is based on, very detailed sort of structural measurements of extending current systems and also looking at where we think some of these areas to be drill tested actually develop tonnage. It's not a hand-waving exercise of, we think we're here. This comes down to specific dimensions and strike of outcrops that we know. So, I think there's probably even more potential, but this is a number that we're confident that we can achieve.
And do you envisage a project, Alex, that would be completely standalone, or would you have the option of a mine gate sale or a toll treatment option around you?
Look, another great question. I actually, part of our strategy at the moment and taking our expertise from a processing point of view and, the team that we're building that have got hard rock lithium processing experience, we actually see the ability to position ourselves as a potential process plant operator that could take and toll other companies, smaller projects that are in the area. So it's a concept that we haven't really put out publicly yet. We're still, getting our thoughts around it. But ultimately we see Mavis Lake will underpin the investment in a processing plant. That then gives us the ability as an early mover to look at unlocking other smaller satellite projects and deposits within the area.
So you have a resource of 8 million tonnes at just over 1% lithium. The exploration target, 18 to 29 million tonnes. So let's take the midpoint of that. Let's call it 25. So you're sort of on your way to 33 million tonnes there. So you're getting into that, obviously well into that band of 30 to 40 million tonnes that you're targeting. Where do you go? Do you think there's scope to go beyond that, or you just don't need to grow it beyond that?
One of our strategies is always continue resource growth where it's there to be done. We believe we've got line of sight to that sort of 30, 40 million tonnes. If we came across more and there was more there, we'd keep drilling, keep growing. This is a strategy. We haven't come up with this ourselves. This is pretty much exactly what Pilbara Minerals did. So they had enough of a resource base to advance the project and move into production, but they continued in parallel year on year growing the resource where the tonnes were there to be gained from drilling. So that investment year on year on resource growth is something we want to continue to do as well.
So the core question here is, how long does it take you to turn the chunk of that exploration target into a resource?
So one of the requirements of the exploration target is to actually put a time frame as to when you could do it. I think in the announcement we came out and said by the second half of 2025. Obviously, there's a fair bit of drilling that's involved in doing that. Access to working capital and managing that efficiently is probably our biggest constraint at the moment, and something that we've got to measure. So, we've put some rough numbers that we would probably need between 25 to 35,000 metres of drilling. We're not going to go and do that straight away, but the first program would be 10 to 15,000 metres. We want to do that in relatively short order, and then we see what the results and then where we continue to invest effort after that.
And what are there stages here? In terms of what are the share price catalysts? Investors would say, well, I love the long-term plan, Alex. I can see sort of where this goes to. You've got good reason to believe you can get to that sort of JORC resource target. But what catalysts are there along the way? The lithium market's not booming. What's going to give you your share price increase?
No, absolutely. And I think the decision we have at the moment with the lithium market sentiment is one of two options: sit on your hands and do nothing, or continue to carefully and with a conservative approach invest in the project, so in resource growth and project progression. So, we've had field teams out, and what did they do? They discovered, additional systems. Great. We're going to do some stripping and channel sampling of the top pegmatite. If we channel sample contact to contact, it actually substitutes a drill hole. So we're going to get essentially very cheap drilling from that program of work, which we're looking to complete in July. Then we really move into drill testing. So obviously, as soon as the drill bit starts spinning, then we start to see the results and release those assay results to market. The top pegmatite is our priority at the moment just because of the high-grade mineralisation that we know is there and consistency of that mineralisation throughout the whole system.
You're obviously perfectly positioned to be part of the North American lithium battery supply chain, etc. How do you see the market developing? Obviously, it's quite a polarised argument at the moment. There are those who say, the market is oversupplied. There are others that say, well, you need to look at it in the course of North America. They want to be more self-sufficient, break away from the reliance on China. How does that play into your development plan?
Yeah, look, it's an evolving piece. So, we are navigating our way through, as others are. We're navigating our way through an industry that's trying to grow itself. And lithium is a pretty complex supply chain. So, the raw material guys are pushing pretty hard. In our area, so in southern Ontario, kind of Michigan State, we're tracking $65 billion worth of investment in electric vehicle manufacturing, battery manufacturing, and cathode facilities. It would stand to logic that you're going to start seeing chemical refineries pop up to backwards integrate into those production lines. And we're about 1,000 kilometres away by road or rail or shipping network into those areas right now. So that's why Canada is being seen as such a great opportunity for American and also Canadian downstream investment and incorporation. So one of the things we've seen recently is a change in the IRA policy and the Department of Energy loans. It's only a recent change, but they're now looking to be able to directly fund raw material projects. So up until recently, it stopped at the refining stage. To be honest, we don't know what that means for us, apart from the fact that it means that the US government is happy to start supporting down into raw material projects. That can only be a good thing. I've got to read up on it. I've got to get my head around, what's coming out of Washington. But again, just a fantastic opportunity and proves that the US government and Canadian government are really committed to, not just in rhetoric, but financially supporting the build out of this critical mineral supply chain.
So what's your next plan? Let's say we say to investors, hey, over the next 6 months, we're going to do what?
So the next 6 months, we continue exploration. That will lead to ultimately, the pointy end where we're drill testing. In the background, we keep working on all of our technical studies work. So, the project advances through technical studies, understanding our flow sheet, understanding the mining economics. We've been actively working on our permitting side, advancing the project towards, being a near-term producer. We say near-term, we're talking about kind of 2026 sort of timeframes, but it's halfway through 2024 at the moment.
It's not that far away, is it?
It's not really that far away, but we only get there by continuing to apply pressure on the project and keep moving it forward.
What do you know about the metallurgy? Because as they say, metallurgy can bring the best projects known to man undone. Have you got much to speak of there?
Oh, absolutely. And you're right. And one of the things with metallurgy is it is what it is. So you can only deal with the properties that you're all actually and how it performs. We've been very fortunate that all the met test work we've done to date have shown that we can make a really clean, low impurity concentrate with good recoveries. The reality is I expect that we would need a DMS and flotation circuit to really extract, the most amount of lithium metal units out of the resource. But that's not to say that we do that all at once. So we're looking at a staged project delivery approach. DMS first, bring on flotation security, keep the initial capital requirements as low as possible. We're doing a lot of test work on ore sorting at the moment. Most of the operators, hard rock operators now, are retrofitting their flow sheets, shoehorning ore sorting into the front end of their flow sheet. We've got the benefit of analysing, understanding, and looking at the opportunity of ore sorting, during design, and then building a flow sheet that works around that. And again, we've seen some fantastic performance from Mavis Lake ore, from both a waste rock to pegmatite separation perspective, but then also from a mineralised pegmatite to unmineralised pegmatite pre-concentration phase. It's been really good.
So given that you're getting some very promising exploration results, which seem to put you on track to get critical mass, as we said at the outset, and you've got the favourable metallurgy, you're in the North American supply chain, would you be tempted to sell part of this project to bring in a big lump of capital to accelerate the whole thing, or do you want to sort of hang on to all of the farm?
Look, that's a great question that no one's really asked. And I think one of the opportunities at the moment is selling a part of the project to be able to fund continued project progression is something that we have been open to looking at. It's a non-equity based way of continuing to do the work we want to do. It's similarly like trying to monetize offtake. And the board at the moment, our view is we'll look at every deal as long as it's a good deal for us and our shareholders. So in a low equity market, bringing in a strategic investor at the project level, it does make a lot of sense. The main thing is you want it to be with the right group that can value add. And you also want to make sure it's the right deal and the right structure. So, unfortunately, those things don't happen quickly. But that's why we've been having some of these conversations for 12, 18 months now. So we can't force them. And to get the right partner takes a bit of time. But it's definitely something that we're working on very quietly in the background.
Great. Alex, thanks very much for your time. We'll watch it closely over the next few months. Obviously, it's not boom times in the lithium industry, but there is clearly a demand for good projects with scale. What's going on in North America and Washington particularly, as you say, is absolutely fascinating. We've got an election there coming down the track. Virtually anything could happen given the way things are unfolding, but demand for lithium in North America is clearly there and growing. So thanks very much for your time.
No, absolutely. A pleasure. Thank you.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media. Hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.